Hello everyone, it's Michael Baltos from Orderflows.com here, and this is the Orderflows market analysis for March 14, 2017. And today is the first day of the two-day FOMC meeting where everyone and the brother is expecting the Fed to raise rates. So, we sort of, and add to that, in the East Coast, New York, there was talk early in the morning that they could get like 20 inches of snow. So, you got a couple of things going on that I think, coming into the market, coming into the session, might give it a reason to be a slow day. And, early on it was a bit slow, but then, there were some interesting things started to happen. And, we'll jump into it. But before we do, first, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, there's a reason why, I have this disclaimer up front, is because, I don't want people coming in thinking that, I have some holy grail, I'm trying to sell them, or, buy my software, buy my course, and you'll become a millionaire next week. No, trading is work. Like any profession, whether you're a doctor or a lawyer or an athlete, it takes work, it takes effort. And, the reason I put out these videos is to help, educate people on, on trading. I don't expect people to take my course and trade 100% like me. No, hopefully you could learn something from, these videos and take something of that and add it to your trading. Now, the tools that I use in this presentation are the Orderflows Trader software, which give me the volume footprint chart. And I got three, I don't know if I'll get around to discussing all these today, but the Baltos Flip, the U-turn, and the transition, which are my own proprietary indicators. I've named them after myself. I just found out over the weekend, another company is copying some of my work, and they're passing it off as their all new discovery on order flow, which is a bunch of crap. It's funny because these are people that have my software that have known me for how many years. And, these are order flow junkies. I'll say order flow junkies, but people that understand order flow and, are interested in learning and seeing what other people have. And, there's several companies that have coming out over the last couple of years have been adapting my ideas. Am I angry about it? Nah, not really. It gives me some vindication that, what I was doing all these years on my own is actually good and, gives value to the market, people that use it. But, at the same time, I would like to get some credit, at least that's why people say, oh, you're naming your stuff after you. Well, yeah, there's a reason for it. I'm the one that's come up with these, and I see people copying my ideas. You want to copy my ideas, give me credit for it. I've worked with other traders, other software companies. People say, hey, I like your idea. I like to adapt it to my software. That's fine. I'll work with you on that. Because one of the things is, since I've developed a lot of these myself over the years, based on my own trading, the Delta Surge, which I give away for free on the website, is based on my own trading and how I look at Delta on, in certain markets that, don't put in a lot of volume and you're looking for signs. If you're looking at a 5-minute chart on a commodity that's not moving very much, it's hard to make heads or tails when the market's flatlining, most of the day. And, you're looking for signs in the Delta that's going to give you a clue. So, buyer beware, buyer beware. That's why, every video I put out here on the YouTube got a disclaimer. Don't come in here thinking that, this is going to transform you into the world's greatest trader. It takes work. You got to put in the effort. I want to learn, I'm not going to just say, hey, I want to learn brain surgery and perform a brain surgery in a month's time from now. No, it's not. There's a lot of work, a lot of education I have to know. So anyway, off my soapbox, and let's take a look at the market today. Like I said, it was kind of interesting. The first thing I want to start in is the 5 years. 5 years were very interesting this morning, and let me get it up in here. Okay, close this down. We were rallying slowly. A very, very, very tight market most of the morning from 7 until 9:30 when we started making these new highs. Took a while. Bonds were making new highs after 9, but 5 years moving like a snail. Finally put in that new high. About 9 about a quarter after 9, and we just kept making new highs. Now this high up here, very, very interesting. Look at this volume that's traded here. At the high it's 4,000. Okay, it's not a ratio that I like. It's 4.4. I'd prefer some sign of stopping volume up here, but even though you don't have it at this level, you got unfinished business. People say, oh, you got unfinished business, market's going to come back. Well, it didn't today. It just sort of sold off the rest of the day. But look at these numbers up here: 20,000, 12,000, even 10,000 here, 20,000, 40,000 here, another 20,000 here, 60,000 lots traded here. Now, it's not at the high; it's one tick off the high. But the important thing is, you got up here, you got a lot of resistance up here. I mean, there's people traded a shitload here, 87,000 contracts traded. Normally these bars, it's 10,000, 11,000, 87,000. So you found an area where people are happy to transact. Okay, and what do you take away from that? What did the market do after that? After it found this value area where everyone can trade, it sold off, right? Notice it did make a run back up here later. This is the O2X trade setup that I talk about. People that know me know about this trade and what it is. You have your high, look for a pullback within 2 ticks. You got your highs right here at 116.22, got up to 21.5. It was bid there even, so it was 21.5, 21.75, and then we sold off. Look at that, boom. But really, I mean, besides that O2X setup right here, this is the O2X right here. This is your O, that's the high. 2 is right up in here. Within 2 ticks of that high. And where's your stop? Your stop's just going to be right behind this high. So you're risking 4 ticks. 4 ticks, right? That's 1 full point in the 5 years. 5 years is worth like $7 a tick or something. 7.81. 1 full tick's $31. You're risking 3 ticks, 4 ticks. That's it. And so you're talking from 116.21. What'd you do? You went down, all day long. Rest of the day, you just went down, 116.19. I don't know if you would have held it all the way there until the 4 o'clock close, but this is 4 ticks here. It's 4, 8, 10 ticks there. So you could at least, you're risking 4 ticks, 3 ticks, 4 ticks, and you're looking at, whatever. It's just straight down. You didn't take any heat on this trade at all. But really the telling point is all this volume up here. Yeah, it's nice if you get it right at the high. It's 1 tick off the high. That's good enough for me. People get all caught up with thinking, oh, it's got to be right on the high. No, it doesn't. Okay, it doesn't have to be right on the high. 1 tick off the high is very good level already. So you can be fairly confident that you have the support, that if we come up here, what do you think is going to happen? Are we going to, are we just going to blow through it, right? You can see the volume profile, a lot of volume there. Yeah, you have some more volume down here, but the important thing is, look at that. You came back up here, you hit the resistance, couldn't follow through, get past up there, and you sold off. That was, one of those take it to the bank, but that was a fairly easy trade to take apart and look at. Now, the other thing I want to look at is this 3-range S&P chart today. I thought it was kind of interesting. Again, we had a very tight range in the S&Ps early, and it was really setting up to be a boring day. But I did in the back of my mind think we're going to get a move because we're for the first from 7 o'clock until about 8:40, we were in a very tight range in the S&Ps. Let me just go back here. Okay, so from just all right, here we are. Okay, so this is 7 o'clock. Basically, we're trading between 65, and 62. Here was this low at 62. This is 7:30. I think we had, I forgot what we had now. We had some number came with GDP or PPI. I can't remember off the top of my head. Up to 65.5. You get this area up here. It's kind of thin volume. Just coming back and forth. It's 8 o'clock. We're still trading. This was interesting, this heavy volume here. I remember, on the volume profile, this area up here, very thin volume. I wanted to see us get past it. We couldn't. Okay, so we hit there. We sold off, 832, got this divergence. Again, just going sideways. At this point, I'm thinking, there's no sign in the delta that, hey, we could start to move off this low or anything like that. So something's going to give, hopefully. It could just go sideways all day, but ever being the optimist, I thought we could get a movement. And I remember here at 843, I thought maybe this time, this is the move I'm waiting for. It's just right below this area with a thin volume. I always like to come back in and blow through that. But we got the delta. Not the delta. It's got a decent delta, 500. But here you got a stacked imbalance, and you got a ratio right after that. I remember thinking maybe this is it. Maybe this is it. And then what happens? You get a bearish ratio right here, 0.04. Not the best sign in the world. Then here you get a single print. One lot here. Again, it's right in there. You're in the third bar already from the stacked imbalance, and it's not going in the right direction. The third bar, I expect us to be, a point or two higher, not back inside of it and going in the wrong direction. Delta's 600. That's not a good sign. You got this bar here. It's lower. Okay. It's the fourth bar. Still inside this imbalance. Again, I don't like being in the fourth bar of an imbalance, stacked imbalance, and to be on the wrong side of it. The fourth bar, I expect us to be up here. So, that was one of those things. Is like, if you're in it, get out. Don't wait. Don't sit there hoping that it's going to just sort of hang around here, then pop up. I mean, you had your chance. It should happen relatively quick. It didn't. Then what happens? The fifth bar, again, still in there. Not even a chance to scratch it. So, I thought that was the first sign of maybe a move, but it didn't materialize. So what happens is but we're still trading around the 65 to 62 area. We're still in this area in here from 65.5 to 62. The low is still 62. You see there. Okay, you start getting some sign. Here you got a positive delta, 1600 price rejector. Okay, but still nothing beyond that. I'd like to get a ratio if possible, or something else. Then this is where things started to get interesting. Okay, what do you got here? This is the delta surge kicking off. Again, you can go to the website. It's free. Download it. And, minus 200, 900, 1500. So you see delta picking up. Okay, maybe we could be making some new lows here. And we do. But, not like powering through these lows or anything. Lower. Couple ticks. We hit this area. It's 25. Okay, 25 used to be the ratio that I liked. I've moved it out to about 30. But I'll take something if it's 28. Okay, maybe. But again, it's small delta. It'd look a lot nicer if it had positive delta and you had a divergence. But you don't get it. Here you have a divergence. 114. That's this green arrow there. Okay, then you get another one. So it's 857. We get 1, 2. This one, almost, but not quite. But anyway, you got 1, 2 already forming. Okay, what do you got? Why aren't you moving away from this low? You're not. You're not getting any powerful deltas. You're not seeing a lot of buying come in, which is concerning me. If we're going to move away from this low, I want to see strong positive deltas. 1,000 or something. Instead, it's kind of weak. It's 400, 486. And then you start coming in negative 1,400. What do you get here? You got another divergence. So you're already looking at 3 divergences since 5 minutes. 857 was your first one. So you got 3. Okay. This one, the delta, is a bit positive. It's plus 900 on the back of minus 1,400, which is quite strong. So taking this one with a bit of grain of salt so far. Want to see how it develops. What do you get? You get a bearish ratio. Positive delta. Doji candle. Small positive delta. Bearish ratio. Delta, it's a little bit on the strong weak side, I guess you'd call it. It's a weak number, but it's fairly it's decent. And then you get some small deltas in here, 194, 173, going back and forth, 208, 209. So these are nothing. These are almost, I'll say, canceling each other out. But you get a little bit of buying, get some selling, a little bit of selling, get some buying. It's just going back and forth. It's in the back of my mind, I'm just looking at 3 failed divergences. Okay, so what do I think when I see that? And the other thing, you can't see it now on this, but you were forming a new lower point of control. So you had one earlier a bit higher. Now you got another one forming here. So what do you got? You got 3 points of 2 lower point of controls. The point of control had moved down from a higher level. And you got 3 failed divergences. So in the back of my mind, I'm thinking, look for a sign that this market's going to start to come off. I think it was fairly low risk trade, and we're just going sideways. And then look, watch this delta. Small deltas in here, 90, 198, 169, negative 443. Boom, minus 1,300. Delta surge kicks off. Okay, that's a sign. You know, you've already got a couple things that are giving you a sign that, market could sell off, and you get the delta surge kicking off. Where can you risk it? You can risk it up to the high of that range, if you want. It's very optimistic. I say optimistic. It's like the worst case scenario. If we got up to 65 and a quarter, that area, you definitely don't want to be short. But there's been no signs that we're going to get any sort of rally off this low. Instead, you're getting all negative signs. So what do? You can be getting short somewhere around 59, 58 and a half. Boom. Delta's, even if you're getting a little short in here, 59, 58 and a half. Look at this, all this negative delta, 400, 700, 2000, stack selling imbalance, ratio. And you pushed all the way down to 56. That's within, whatever, a minute. Okay, again, still no major signs that we can start to rally yet, and we're just looking like we're going sideways. Here you get this divergence. This is 930. Got a ratio. Okay, that's positive. That's something to go off of. I always like when you get a divergence with a ratio. I don't like that you follow it up with this doji bar, but what can you do? You're starting to string together some positive deltas, so okay, maybe we could start to pull away. But for the most part, it just sort of went sideways, made a new low. You got 3 in a row here. Again, this is a setup that I like, but take things in context of the market. You got a bearish setup. Where do you want to be taking it? You want to be taking it going into a low, or when you get a bearish setup, take it up ideally higher, up near the high of the day, or much higher in the day structure. I'm always hesitant taking setups to get short going into a low. Now that's not to say we can't make new lows, but you're going to be fighting sometimes. If you're getting short into new lows, it could be support coming into the market that you got to fight with. I'd rather not. So we made these new lows down to 4.5, and then we just sort of hang around here, going into 10, start to rally. But I had to go out after 10 o'clock. But that was a decent, I'll say a decent trade opportunity. But in the morning at that time, this was you had a couple signs that the market could go lower. Okay, now the next market I want to talk about is, what was it? Soybeans. I'll take a look at the 10 range E-mini chart first real quick, because, it was kind of interesting, since we were just talking about E-minis, but I don't need the profile though. This morning, here, again, you can see it on here this morning. Basically, you're trading between 62 and 65 and a half from here, 7 until 9 o'clock. And then you come in here, you get this new low, you get a stacked imbalance. And again, it's interesting, what happened in this bar. Where did you trade back up to? You traded right up to this point of control. You stayed below this stacked imbalance, which again is, a bearish sign. And where do you trade? You traded up into this point of control, acting as resistance as well. So you got a couple of resistance levels, and the market respected it. If you wanted to take a shot on it, you could be getting short here again, still around the 59 level. In this bar, it's around where we opened. I said where was the low? 4 3/4. So not necessarily a full 5-point move, but you could have got something out of it. 2-3 points out of it, which is something. Again, you have that divergence there, but you can see how the selling is weakening off as you still got positive delta in this bar, and positive delta. So the selling is getting a bit weaker on the way down. So you could possibly be looking for a turn in here, which you got right there. Then obviously it went up. But the other thing I want to talk about real quick is soybeans. Soybeans don't get as much respect as they should, but it's a great contract to trade. One tick is $12.50, just like the E-minis. And it follows order flow. Commodities follow order flow. Sometimes I feel much better than financial contracts. But I say that because I used to be a big time commodity trader. And it's when you're dealing with supply and demand, it doesn't get any more supply and demand based than commodities. So soybeans, here we are. Go back, soybeans open 8:30. Well, I mean, they're open all night, but the technically the day session is 8:30. This low here. So you got divergence, 75. You see the delta is kind of weakening here, minus 400, minus 200, positive, then plus 300. This is a thing that I like, how you get weakening delta right around the, either, on the bar of the low, the bar after, or the low of the bar, the low of the day. You get the turn, it's turning here, and you got the delta positive, strong delta here with the ratio, and you can see how the market rallies off this. It rallies quite strong. Again, this is a 3 in a row. Again, what I was saying, take things in context. You're trading a bullish sign. Would you rather take a 3 in a row here off the low, or would you rather take it going into the high? I find it's got much better capacity for upside potential, taking a 3 in a row, taking a buy setup near the low of the day, than taking a buy setup at the high of the day. I mean, that's me in my trading experience. People will beg to differ and throw stones at me, but you know what? I've traded 20 years, and I know what I like to see. Like I said, not everyone's going to agree with me, but if I'm looking for a place to buy, I'd rather do it, somewhere on the lower end of the day than on the higher end. And you can see, 995. Even if this in here, say you weren't convinced that this is a low, got a 3 in a row, say you're getting long up here, 996. What's the trade up to? Look at this, trades all the way up in here, comes off a little bit, 1001, just makes another run back up here. You get a little further high before it starts coming off again. This is important, but I'm not going to talk about that. What else was there here? Selling the balance right on the low of this bar. That's what this green arrow is telling you. Hey, idiot, buy it. Here you got a ratio as well. You got a lot of things going on in here, which is telling you, hey, you get a short-term pop here. This is 1016. What does it do? Again, it goes from 1001, 1001 and a half. It shoots up a quick, 4 or 5 cents. 4 or 5 cents in soybeans is 4 or 5 points in the E-minis. This is a $250 move right here. That's equivalent from S&P's going from 2360 to 2365. It's not as glamorous to trade soybeans as it is, say, I'm an E-mini trader, but you get some really nice moves in commodities. This was a nice sell setup in here for another couple of cents. There were some nice things in soybeans. I'm sort of getting back into beans. It's a bit of a margin hog though. Beans are over $1,000, or you could trade minis for $500. If you're trading intraday and you're using margin, but it's a decent contract to trade intraday. So anyway, I just want to talk real quick about some of these indicators. This is the U-turn. Going back to the cash, 8 o'clock. I mean, look at this. It's picked this low here. Didn't really hold. Sort of went up, came back down, then picks this low. Low of the day. Goes all the way up here. Get this. So again, you're not going to be pretty long off this. You're probably not going to be getting long up here. And again, would you rather be long from down here or up here? Get a short here. Doesn't really work out. Comes back against you. Get another buy here. Up to here. It doesn't really work out. This sell doesn't really work out. And it takes you to the close of the day. Just real quick, the E-mini transition. Basically go back to about 8. I'll show you these, because people, you're not showing the failed trades. 716. Are you trading S&Ps at 7 in the morning? Yeah, maybe. This one didn't work out. This one failed. This one worked out beautifully. 2360. I mean, if you're reading the order flow, you could have saw it anyway, or be getting short in here at 59. All the way down to the 56 area. It's the quick 3 points. Yeah, it would have been nice if you got this buy down here, but the low wasn't made yet, and it still had a little bit more capacity to go. So, if you're getting long in there, you probably would have been stopped out, unfortunately. Yeah, something similar here is a little bit off on the high. Yeah, it would be nice to get the high up in here, get the sell signal, but it came in there. You get this buy here. Yeah, it went up, went sideways to higher, and that was it. So even if you're buying it in here, 59, you up to the 60s, 61, 62 area to close. What else do I got for you? I don't want to keep this too long. Last week was a very hectic week for me with some stuff happening. I lost my power one day, and yeah, it was just a bit of a nightmare on some things. But yeah, that's about it. You know what? I'll show you my mini Dow 100 tick chart. It's a nice one, usually, but today, not so nice. But still, I want to show you. 8 o'clock. This one didn't really work out. This one did, but then you got to sell here, which you probably wouldn't take, and this one you probably shouldn't have taken either. It's easy for me to say, oh yeah, you shouldn't have taken that, but you know what? You got to let the market take you in. The market's not moving lower. It's not moving lower. This one, yeah, it started to make the move. Could have got something here. There's a nice little bit of something. Nothing in here. This one failed. That would have stopped you out. This one decent here. A little bit of a move. Nah, that you wouldn't have gotten in there. This one, yeah, it started, then it came right back up. It would have been nice to get a sell signal here. This one, no, it took a little bit of time to go up, but if you took it, you would have been stopped out on that one. But you would have been rewarded on this trade. Again, rewarded on this trade. Then you went into the close. So anyway, I don't want to keep this too long. I could go on talking for hours, but I don't want to. So thanks for watching this. To learn more about the trading software used in this presentation and how you can profit from Orderflow, visit my website, www.orderflows.com.